Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. Today I'm joined by Paul. How's it going, Paul?
I'm doing great. How about y'all?
The chat is relatively quiet this morning. We've got two good mornings, three, so they're not having a good day, Paul. They're not happy this morning.
Oh, man.
It's too early for them.
Must
All
be
right.
them.
Yeah,
That's it.
it's all them. It's not us. We're good.
Let's blame the viewers, that's for sure.
All right. Well, let me jump into some TA real quick, give people an idea of where we are standing. Also, by the way, to the viewers, feel free to click that like button. That's always an option as well. All right. So yesterday was obviously a very interesting day. The market has been kind of balancing. It's been kind of just wasting time going sideways for the last few days, waiting for the FOMC notes to come out, waiting to hear what Papa Powell has to say. And the initial reaction to Papa Powell made it look to me by the end of the day yesterday like the market was going to go lower, okay? Because in that first, super reactive move that it does right at 2 p.m., the market made this massive move to the upside in a matter of minutes, and then it completely retraced that move and never made another attempt at it. It never made another move to the upside. That is generally a sign that the market doesn't want to go up, right? That it went up there, it couldn't find buyers, so now it has to come back down to find discount shoppers willing to do business inside the range. So it did that, which was fine. It chopped around inside the range the whole time Powell was talking, which was fine. No big deal. But then at the very end of the day, it spiked down. And this was very interesting to me because first off, anytime you have a spike down, it increases the odds you're going to have momentum down the next day, okay? And also it made a lower low on the daily. So what that did was that ended the momentum up that we had on the daily, and it gave us an engulfing day on the daily range, meaning that this day's range completely engulfed the previous day's range, and it left value completely inside of the previous day's value. So the range and the value is telling you it's 50-50, can go up or down, and the spike down is telling you it's more likely it can go down. Okay, great. Nothing to worry about. If we'd opened lower today, I would not have been surprised. If we opened somewhere inside yesterday's range, I would not have been surprised. But instead, it looks like we're opening with a gap up, which is exactly the opposite of what should happen.
Those sneaky Europeans have gone long on us. That's what they've done.
Yeah, those Europeans, they tried to fight America. They bought
No,
puts.
they're trying to buy America.
Well, no, that's what I'm saying. Now they're covering their ass, right? They were buying puts. They were going short. They were thinking the market was going to tank. And then in the overnight, they were like, shit, we got to get out of these. We got to get out of these shorts. So they've started a new wave of momentum to the upside. So momentum to the upside is always created from two things. First, you get shorts to cover. Then you get FOMO buying. You get new traders to chase price to the upside. Okay, it's something we're talking about in the Mastery of Markets and Minds workshop today.
Oh.
The auction process. So essentially, that's what we're looking for today. The bigger picture question we're asking ourselves as market participants today is, do new buyers step in today and keep this momentum going up? If not, we'll pull right back down to yesterday's lows. But if we can bring in new buying, we should be able to continue the momentum to the upside. Now, because of that long selling tail at the high, long buying tail at the high, it's hard to pick an exact level where the market might reverse today. So I would say any support above this node right here around 57.30, any support above that should be considered those new buyers. That should be considered that now regular trading hours buyers are stepping in, they're taking profits, they're entering long trades, so on and so forth. Okay, so anything above 57.30 in my mind is bullish. If we push below 57.30 and we start to spend time and bring in volume below 57.30, that would be bearish to me. Again, shorter term for the day. It would mean the market is probably heading down towards yesterday's lows. Okay. I can't tell you exactly where the market will bring in buyers. We may open and immediately start to push higher. We may open and fill the gap, getting to 57, 56, and then bring in buyers and head higher, or we may need to pull down a little bit into yesterday's range, which is why I say, to me, there's no reason to short unless we're below 30, because anywhere in here, the market could just flip in reverse and start heading right back up. Okay, so that is basically the lens that I will be watching the market with today. I'll be sort of neutral to bullish above 30. With any new buying today, with any support in the market, I will get very bullish because I will be expecting that momentum to continue. And if we get below 30, I'll be neutral to bearish as long as we're inside yesterday's range. Okay. Let's just real quick take a look at the NQ. I'm sure it's doing the exact same thing, but we'll just compare.
It is levels. Indeed.
Yeah.
Although the NQ is still about 1,000 points from its all-time high.
Yeah. That is a great point. But honestly, that's not a bad thing because that just gives the market targets to the upside. That makes it easier to trade long because you know where to take profits, which is the large nodes. And look at where the overnight flipped, exactly at the large node. Wouldn't you know? Okay, so the NQ, same story. The level that I'm watching is 19,845. Okay, so same exact thing. Wouldn't necessarily be bearish if it pulls down into there. The overnight inventory is completely net long. So some of this is short covering, some of this is new buying. The market pulling back a little bit to give those overnight traders a chance to take profits is not bearish, right? Especially if regular trading hours traders buy that dip, okay? I will also note this looks like a very large gap on the NQ. Often large gaps don't fill the first day. So they may not even get to yesterday's high around 19,885. They may find support above and just go. So we will have to wait and see. All right. Well, I guess that's as far as the NQ and the ES go. That's the important TA. You got anything for us today, Paul?
Unemployment rates, unemployment claims came in about flat, so that's fine. And nothing's particularly moving. I mean, the futures are up, Europe's up, everybody's up. So it's kind of a virtuous cycle. I mean, there is something worth just taking a peek at here. These are basically all of these European countries plus Japan and Australia and where they are on their rate cut cycles. And so a lot of European countries are beginning to cut, but I don't know. It's just been a long time since we've had rate cuts. I mean, 4 years is just a long, long time. So we'll see how the market reacts generally, but you would think it would make stocks more attractive generally as a general theme, but there's a lot of factors that come into place. But yeah, risk on, because if the Fed's going to be paying less in interest, then dividend yields become important, and the potential upside in stocks becomes equally more important.
I agree completely. It doesn't take a genius to look at what's happened in the past to the stock market when they cut interest rates. It goes up. Yep. It's like stocks become essentially cheaper because money becomes cheaper.
Yep.
So, yeah, no, I think that's a good thesis. Of course, intraday, anything can happen because of, the way people are positioned and they have to unwind their positions, but bigger picture for sure.
Yep. And I'll go on record as saying I was wrong. I was definitely on the side of a 1/4 point cut. I was not on the side of a 1/2 point cut at all. So
okay, I'm sure the chat's not mad. I'm sure they'll accept your apology.
Well, I'm not Chairman Powell after all, it seems, but that's life.
Fair enough. Anything else news-wise we need to know?
Nope. I think, it's pretty flat. I mean, the news is the interest rate right now and how the market's reacting to it.
Okay.
So that's the main thing.
Yeah, that's the ruling reason around the market right now.
I mean, the oil trade seems to be on. Oil continues to hover at 70 after bottoming at 66, more or less. And I'm thinking, it's probably going to end up at 63, 64 in the next couple of weeks, just based on market dynamics without any political interference.
I have oil at 70 right now.
Yeah.
Yeah.
I don't know how. Sometimes these guys, they just do it differently. I'm not a big fan of Market Watch. Everything's kind of in one place for me.
Oh, I see. I see. You're looking at Market Watch. Yeah, yeah. On the crude futures chart, it looks like it is. It's at.
Yeah, it was all around 70 yesterday.
Yeah. So yeah, it's a moving.
Cool.
They bought the dip, man. They bought the dip. All right. So we got a question in the chat here, which says, Charles, do you have a 45-degree angle from yesterday? Huge support? Question mark. So, okay. The 45-degree angle, which is something that I have talked about in the past, is purely related to the overnight inventory. Okay. So, for example, if you look at this overnight range, that was a 45-degree angle from the high, right? And I mean, we didn't even head up to test it that day, but that's the 45-degree angle. So what we have from yesterday's range, that's just a normal balancing low, right? That's just a normal bell-shaped curve, essentially, that the market made yesterday. Like I said, the thing that was interesting to me was the fact that we closed at the lows. That generally is a sign the market wants to keep going lower. So we have this thing that we use in RTA called when what should happens doesn't. And the idea is simply if the market generated information is telling you that one thing is more likely, but then the opposite happens, it means whatever you thought was happening, the opposite of it is happening. So if I thought the market was getting ready to roll over and head lower yesterday, and then I see a massive gap up this morning, I'm thinking, okay, we're actually going higher. That's really the main focus I have on the overnight inventory. And again, I just want to emphasize to everyone that the overnight inventory is net long. Okay, there are more buyers than sellers. So it should pull back a little bit so that those buyers can take profits, but that's not bearish. A pullback is just the market looking for a place to bring in regular trading hours buyers and then continue. So yeah, that's how I see that. Any other questions from the chat? RK says stocks were down 20% 12 months after the cut of the tightening cycle in 0907. Yeah, that's a very strange time to go back to. But yeah, and that's 6 months out, right? So we're not 6 months out. We're 1 day out. Generally speaking, people get a positive outlook on making investments, on taking on risk, right? That's what Paul says, is that it just increases people's confidence taking risk on sentiment.
Well, if you layer your risk factors, you basically are, that's how you layer it in.
Yeah.
Those get padded on.
Yeah. It's just a sign that it's safe to invest. You know what I mean? It's safe to buy stocks. According to Papa Pal. All right, guys. Well, we will leave it at that. Like I said, bullish above the levels that I mentioned. Looking for continuation to the upside. Let the party begin. Thanks a lot, everyone. Thanks, Paul.
Yep. Thank you.
Have a good one. Bye.